Good morning. It is Thursday, the 2nd of April. This is our stable monthly update. The cost of borrowing for UK SMEs is already showing a slight increase. This is a chart taken from the Bank of England, which is a great source of data and charts. I'd recommend people to take a look at it if they have a spare moment. There's some really interesting facts and figures in there. But this is looking at loans for small and medium-sized enterprises. And you can see across the beginning of 2026, the cost of borrowing was in a decline. We've now spiked slightly from an average of 6.35% up to 6.69%. So a fairly small increase in the grand scheme of things. But given what's happening in Iran and the way the market is pricing in risk, we can see the cost of debt is increasing, which for some businesses will be a concern. There may be existing finance products which are going to be repriced, or they may be looking at taking out new products, which will invariably come at a higher price. On the flip side, obviously, there's some benefits to potential rate hikes, but we'll cover that a bit later. So, interesting bit of data there. From a treasury perspective, one of our partners provides a range of fixed-term fund solutions. Thought it'd be worthwhile highlighting that to any of you who have already been on a demo with us to have a look at these products. But you can see there the range up to a year at 4.39%. As an example, a cash balance of £500,000 would generate a return of 3.9%. Across 3 months, it's just under £5,000. Across a full year, it's just under £20,000. So many of the businesses we speak to often get 0% on any of their business bank accounts or current accounts, and the business savings accounts will typically pay somewhere around 1.8 to 2%. So just a reminder that there are much higher yielding products available in the marketplace. So please come and speak to us if you'd like to explore these options. We delivered 3 key events in March. The first one was the Progress Shed. So this is a partner we met in Bath. They deliver workshops to businesses in the southwest of England. We hosted it with them at Cumberwell Park in Bradford-upon-Avon. Myself and Steve presented the stable solution to a range of business owners. We had restaurant owners. We had hot tub and swimming pool manufacturers and resellers. We had builders. We had lots of very interesting businesses there. The main theme from that event was getting access to funding. Everyone we spoke to was either in the process of applying for business loans, or they were looking at restructuring the loans they had. But it was a massive theme. Clearly a really important time for businesses to catapult into their next phase of growth. There's 1,000 lenders in the market. It's not straightforward, put it that way. It's not straightforward to go and find the right type of product for your business. There was a golf day Tom and Steve hosted at Burnham and Barrow. It was a really stormy day. It was a couple of weekends ago when we had some really aggressive winds and rain and hail. But again, this was a partner delivery project. So we work with partners to get their customers out of the office onto a golf course, give them a good round of golf, but also talk to them about their business, talk to them about the challenges they have with banking, with lending, with payments, that type of thing. So a really, really nice way for us to engage with our partners, their clients, and create an authentic event that's engaging. At the bottom right, we also had our first evening event in London at the Paris Grill. We had over 50 people at the event, which is fantastic. We had a guest speaker, former Special Forces soldier, fantastic food and wine, and a really, really great evening for us to engage with our partners, our prospects, and our clients. From a currency perspective, these 2 extracts are from TradingView. The top one is a heat map. No surprises there that the US dollar, if you look against its peers over the last 3 to 6 months, has had a very, very strong run. Not quite as strong as the Australian dollar, though. So the Australian dollar has just pipped it to first place. The Australian economy has been hiking rates in a time of uncertainty. They've also got heavy ties to the commodity space, which has been all over the place since the Iran invasion. Euro and sterling there, not looking too good on the board. And in terms of the currency indexes at the bottom, again, no surprises. Over the last 3 months, the dollar index has increased just under 2%. The sterling index has fallen by 1.2%. And the euro is about 1.5%. So lots and lots going on there. As you probably have seen from the news, what happens today will be completely invalidated tomorrow, and so on and so forth. So a very tricky space at the moment to be in if you're exposed to rates, if you're exposed to market fluctuations through currency movements. A quick update finally on two major currency pairs that our customers are typically involved in. Sterling dollar, beginning of the year, we had a nice push up to nearly 140. And then since then, we've been in a steady decline, mostly fueled by what's happening in Iran, but also lots of uncertainty around what was going to happen between the interest rate battle in the UK Bank of England and the Federal Reserve. But the focus now really is on the Iran conflict. What will be the extended knock-on effect on risk? What will be the effect on the cost of living if there are continued supply chain issues and oil shortages? And as you can see, we're now in this descending channel. The last time we traded at 130, there was what's called a double bottom back in November time. You can see here the market bounced. So from a technical perspective, you might see the price head back to 130, which historically has been a psychological level before it either looks to break lower or rebounds. But it's currently trading under the 100-day moving average, and it looks like it's continuing this channel. Sterling euro, slightly different story. Since August last year, it's been capped at 116. You can really see that level there acting as a ceiling. The last rally was at the beginning of March, where we just toppled over 116, and we're now looking to make new lows again. So from a market perspective, sterling euro has been a fairly uninspiring currency pair. Trading in a really tight range between 114 and 115.50. But again, we're now in a situation where we might be looking at a completely different market outlook for the UK based on our manufacturing, based on our spending sentiment, based on the Bank of England compared to Europe. And sterling is certainly at the moment a less favourable currency based on that. The euro's always had a slight safe haven policy with it when markets are going down the toilet. So that's carrying their or helping their story along. So interesting to see there. Markets may look to consolidate around 113, which will be the low that we've seen in the last 6 to 9 months. But definitely one to watch.